Just ask yourself, when was the last time you gained 226 plus pips with a single trade? When was the last time your signal provider gave you all these pips for free? When was the last time your signal provider, instead of copying out the signals, gave you a proper indication, proper signal, proper breakdown video, and educated you about Forex market? You can't remember, right? In this signal breakdown video, we're going to describe and analyze all the aspects, all the confluences, all the indications that we had to provide you with all these pips. This is the signal breakdown video of EURJPY, in which we gained around 226 plus pips, and all the breakdown goes like this. Let's just start with the daily time frame to give you with proper indication. Now if you just pay closer look in the daily time frame, you can clearly see that the price had a breakout structure, because if you simply consider this as support level, then the daily candles, main daily candles, close below this level. So this clearly indicates that the price is bearish. At the same time, the price is consistently creating lower lows and lower highs, because simply consider this. As you can clearly see that the price has a bearish momentum, we had to make full advantage of it. So what we did was we simply draw our Fibonacci from this high to this low, and we found out something very interesting. As we can clearly see that the price had a rejection, a serious rejection from the 72.2 discount level. It gave us indication that we need to find some perfect entries to execute this trade. So we simply jumped into the 4-hour time frame and we saw something very interesting. If you are a retail trader and if you're familiar with the concepts like trend line, bull flag, bear flag, then you can probably recognize this thing. As the price is rejecting this trend line and the price is consistently creating low lows and low highs, then you can simply identify this as a descending trend line, right? So what happened was, with this descending trend line, the price at the same time attracted a lot of sellers in the market. But just with this candle occurred if I just open my session indicator during the London session, because this green zone indicates the London session. So with this green candle, with this bullish candle, price not only grabbed all the stop losses of the sellers, at the same time it attracted a lot of buyers in the market also. As a consequence of it, the price simply dropped. But it didn't provide us with an instant rejection. What the price did was, the price simply just consolidated in this zone for a while and then had a drop. As a consequence of it, we were provided with a breakout structure, because if you simply consider this as a support level, then the price clearly broke below it, right? So we had to consider this as a proper breakout structure. The next thing that we did was, as this was a manipulation candle, because this candle not only simply removed all the sellers in the market, at the same time it attracted a lot of buyers in the market also. So we had to consider this as a manipulation zone. And you know what, history repeats itself, so the price had to reach around this level also. So the next thing that we did was we simply draw Fibonacci from this high to this low, and we found something very interesting. As we can clearly see that these candles produce some order block areas, which we will define in the later part. The order block area perfectly aligned with the 78.6 discount level, which is a deep discount level, and it gives you with some tight vessels and some high risk-to-reward ratio. The next thing that we did was we simply jumped the lower time frame in the 2-hour time frame, and we simply jumped in the 45 minutes time frame, and we found out that the price already produced the order block area. Because if you simply consider it like this, with this bullish candle, the price attracted a lot of buyers in the market, and as a consequence of it, the price had to reach this level. This bullish move, this sudden bullish momentum was produced because all the banks, all the financial institutions opened up huge long positions around here. So the price had to reach this level to go down, so that banks can close their positions at drawdown. So at the same time, with this bullish candle, with the move of the news, the price also grabbed the liquidity of this consolidation, because as the overall momentum was significantly bearish, all the retail traders went short around this area. So the SL got hunted, and recently entered this zone after we started seeing some rejections, and when we saw that the London volume was supporting our bias, we simply went short. And this trade is currently running around 233 plus pips in 𝗲𝐹X and 𝗲𝐹X VIP. We've also included a screenshot of our trade so that you can easily understand and authenticate our trade. This trade is currently running in both of our free and VIP channels. I've got a good news for you, because if you're thinking about joining our VIP service for free, in which you can get signals like this on a day-to-day basis, we've got an amazing offer for you, because we're offering our VIP service absolutely free of cost. All you have to do is simply go into our Telegram channel and go through all the process, and you can easily identify the post that will indicate you to where to get the free service. Another thing that you can do is we have also included our support platform's name in the video description down below. You can simply go through that and you can easily join our VIP service absolutely free of cost. Thank you. That's all for today. Stay with 𝗲𝐹X.